With everything happening with Tesla stock today, are you a bear or a bull? Even experts aren't sure what to make of Tesla stock given its volatility in the stock market today. Still, many are optimistic that Tesla stock will rally in 2023. You would not want to miss this. 1 year ago, Tesla at all-time highs. Today, Tesla at 2-year lows. Holding Tesla reminds me of dating some of the cray-cray women of my debaucherous youth. Volatile AF. Content creator Stephen Mark Ryan said in a tweet just before Christmas. Steve Mark Ryan, a known YouTube content creator covering Tesla stock, owns a bit of Tesla stock according to his Twitter bio. In a series of tweets, Stephen Mark Ryan expressed his thoughts about Tesla CEO Elon Musk. Zero people who understand Elon Musk are surprised, he said in a tweet. He shared that it has been interesting to see all the discussions and see people tell Musk to shut up and stay out of controversial discussions. This is like telling a fish not to swim. Do they not understand? He said in the tweet. He explained that of course people are entitled to their opinions and that he encourages the discussion. But what has stunned me is how many people genuinely thought there was a possibility Elon Musk would stop speaking up on things that matter to him, because they pleaded with him to stop, said Stephen Mark Ryan. In the following tweet, he emphasized that Musk will always do what he believes is the right thing for humanity. This above all else. No matter how much pushback, how much criticism, how much heat, he will never stop saying what he believes is right. Of course, it is inevitable that people might not be receptive to what Musk believes in and that some may disagree with the things that matter to Elon. However, Stephen Mark Ryan thinks that you'd have to be super dim not to understand that Musk cannot and will not sit idly by when things matter to him, especially when he sees a long-term risk to humanity, especially one others can't even see, he added. In short, Elon's gonna Elon. That will not change. Don't try to change Elon. If you don't like it, that's fine, but it's futile to expect, hope, wish, or want Elon to change, he concluded. That said, many believe that amidst uncertainties and Musk-related controversies, they put their trust in Musk. Of course, that is not to say that they do not have any misgivings, as that would be impossible, but that they are betting on Musk and what he believes he can do for the company and the world in the long run. According to a NASDAQ article, Tesla could deliver more than 2 million vehicles in 2023. If this happens, the expected rise in the company's stock is possible. In August, Wedbush analyst Dan Ives cited Tesla's improving production rate at its high-output factory in China and the company's overall momentum heading into the end of the year. Although Tesla's Shanghai factory suffered major setbacks earlier this year when the local government restricted factory operations as part of its efforts to slow the spread of COVID-19, Tesla shared in its Q2 update that production rates at the important factory have not only rebounded but have risen to record levels by the end of the period. When investors view this momentum alongside Tesla's reported continued improvement at its factory in California and its ramp-up in production at new factories in Texas and Berlin, 2 million deliveries in 2023 begin to seem likely. After all, Tesla's factories are already tooled for annualized production rates of more than 1.9 million units annually, and Tesla management hasn't indicated any intention to slow down its investments in production capacity expansion. Tesla management has also indicated that it expects to have its current manufacturing capacity fully utilized by the end of the year. It can be noted that Tesla CEO Elon Musk said during the Q2 earnings call that the company has a good chance of exiting this year at 40,000 vehicles a week. This translates to an annualized run rate of more than 2 million units a year. Moreover, while delivering 2 million vehicles this year would be an exciting achievement for Tesla, it would represent only a fraction of the company's vision. Musk said at Tesla's annual shareholder meeting that the company eventually hopes to have built 10 to 12 factories, with the new ones supporting massive output of around 1.5 to 2 million vehicles per year. Tesla bulls are optimistic that the EV company will continue to thrive amidst challenges. In fact, Tesla's share price has notably rocketed upward by more than 700% in 2020, despite it being the peak of the global COVID-19 pandemic. In an article, the American magazine newspaper Barron's noted that Tesla stock could rebound in 3 months. At this point, what's ahead for Tesla stock in the new year is a big question for investors, coming on the heels of a disastrous 2022 and chief executive Elon Musk's entanglement with Twitter. Notably, Tesla has been a monster stock over much of its history, especially during its stratospheric run from mid-2019 to late 2021. But it's been a big loser in 2022, down about 65% since the start of this year, and it's sunk about 44% since Musk completed his controversial acquisition of Twitter in late October 2022. Musk bought Twitter in a contested $44 billion deal, and he has sold billions of dollars in Tesla stock in order to help finance the deal, much to the consternation of investors. Musk shook up management and staff throughout the company's workforce, eliminating about half of Twitter's 7,500 employees. In the process, Musk also has rattled Tesla investors. They have grown increasingly frustrated with the amount of time and money he has spent tearing down Twitter in order to rebuild the social media site to his liking. In light of that, Wedbush analyst Dan Ives laid out what tasks Musk needs to do to turn Tesla positive in 2023. Among them is to name a CEO at Twitter by the end of January. Another is to stop selling stock, as Musk sold roughly $40 billion of Tesla stock in the past year. Lay out the strategic plan for Twitter, I've said in a note to clients. Right now, very simply, the fear is that Twitter is bleeding money with advertisers fleeing for now, which means more losses and therefore more Musk Tesla stock sales. He said Musk must turn his attention back to Tesla and announce a major stock buyback. A longtime Tesla bull, Ives also said Tesla stock is under heavy pressure due to concerns about the possibility of an extended production shutdown in China for January. With China the core linchpin to the Tesla bull thesis, worries are growing around what the softening demand picture looks like for 2023, given the dark macro clouds and increasing domestic EV competition, he said. He also thinks that higher inventory levels, recent price cuts, and overall production slowdowns in China suggest that Tesla will likely miss reduced street estimates for the fourth quarter, and he expects a softer trajectory for 2023. It is no secret that Tesla has experienced a number of setbacks lately. The company missed delivery estimates in the third quarter, and while management had previously guided for 50% growth in annual deliveries, CFO Zachary Kirkhorn recently said deliveries would fall just short of that figure this year. Tesla places the blame on its batch shipment strategy, which creates logistics bottlenecks near the end of each quarter. It certainly did not help matters when Tesla temporarily shut down Gigafactory Shanghai in response to a surge of COVID-19 cases in China, which arose following the government's easing of zero-COVID policies. Gigafactory Shanghai is Tesla's largest factory as measured by car output, according to the Wall Street Journal, so its closure could cause fourth-quarter deliveries to fall even shorter than previously expected. Further, and perhaps one of the most impactful, many analysts have expressed concern about Twitter, noting that CEO Elon Musk may be neglecting Tesla and its shareholders at a time when the electric car company desperately needs his leadership in order to focus on issues facing the social media platform. As a whole, the bear case is compelling and worth considering, but it centers around short-term problems. Still, despite delivery shortfalls and softening demand, Tesla sold more fully electric cars than any other automaker through the first 3 quarters of 2022, capturing an 18.5% market share. For now, though, 6 analysts recently cut price targets on Tesla stock, but their price targets stayed well above current price levels. Overall, analysts have broadly maintained buy and outperform ratings. Baird analyst Ben Callow, in a note to clients, recently called Tesla a best idea stock in 2023. He kept a buy rating, saying the company remains positioned to capitalize on the growing demand for electric vehicles. We continue to believe Tesla is the best positioned in the auto market as electric vehicles continue to take share of the total auto market, he said in a note to clients. Subscribe to this channel for more huge Tesla stock updates.